Hello and welcome to the Collective Shift channel. Matt here to share with you the biggest news from the past week in the macro space and the crypto industry. Thank you for tuning in to what is my first episode for the year, and I look forward to many weeks and months ahead of your continued support, whether that's by subscribing, leaving a comment, or just sharing these sorts of videos with your friends. It's all very much appreciated. All right, let's get into the economy. And yeah, I have to kick things off with just what's been going on in the markets over the past 2 or 3 weeks. Definitely a lot of jitters and a lot of nervous investors out there at the moment. The more riskier kind of assets, such as tech stocks and crypto assets, have really taken a hit over the past 2 or 3 weeks in particular. What's going on? Why is that the case? And should you be fearful of that continuing to happen? All right. So like many things, these days, there's a lot of reasons why something may or may not be happening. In my opinion, the biggest reason for this heavy sell-off is fears to do with inflation and I suppose the consequences of those fears. So what do I mean by that? If inflation's getting too high, central banks, one of their biggest, ways, or their way of kind of quelling inflation, is to tighten monetary policy. To tighten monetary policy, they have multiple tools at their disposals, the most common being cash rate or interest rate, so they can increase the interest rates to really, make money more expensive, in quotes. Or the cost of money, you might see that referred to. And then another tool they have at their disposal is to, ease up on quantitative easing. So you might see the word tapering. Tapering just means, central banks kind of, progressively decreasing the amounts of money that they are putting into the economy by way of things like bond purchases. That's probably the main one. Quantitative easing, as you would have seen in the past year or two, has been, really, you might often see the term money printing. Central banks just kind of going into overdrive with money printing. So you're seeing that start to wind up this year again. Why? Because central banks are fearful of inflation rates really getting out of control. And finally, the third monetary policy tool that central banks can do is basically the opposite of tapering, and that's the opposite of quantitative easing, and that is quantitative tightening, which is, really, I suppose, central banks kind of normalizing their balance sheets. You'll often see the word normalizing of the balance sheets used, and that just essentially means central banks selling off all these assets that they've been buying off the secondary markets and primary markets, over the past 18 months. And as you would have seen all over the news, the balance sheets of central banks all around the world have just shot up into unprecedented heights. And now you're actually starting to see Jerome Powell, like the US central bank head, start to even mention, normalization of the balance sheets, which has started to freak out. That's in particular has started to freak out investors. The fact that they're even talking about that, which is the complete opposite of money printing in this case. That is the main reason why high risk assets are really taking a hit in recent weeks. That's happening. What's going to happen from here, and should you be concerned, assuming you are invested in crypto or tech stocks. A lot of that will be dictated tomorrow. So Wednesday Eastern time will be the latest release of inflation data, and I think it's expected to be somewhere around 7%, which is, compared to history, is very, very high. Central banks in developed countries like to keep it around 2 or 3% inflation. So another print of about 7% would just be, again, historically high. As I've said in previous episodes, it all has to do with expectations. So markets always react to whether a key economic data point is higher or lower than expectations. So if inflation is higher than 7%, I would expect markets to freak out a bit. Kind of doesn't exist, but I would expect a lot more selling if inflation gets to 8 or 9% tomorrow. I would expect a heavy sell-off in tech stocks and crypto markets. If the inflation tends to be about 5 or 6%, I would expect tech stocks to rally, and crypto stocks, rather crypto assets to rally. That's just more because of it is all just tied to this inflationary backdrop. So, or monetary policy backdrop. So it's really the inflation data is kind of dictating, dictating central banks. It's the main thing that they're concerned about, I suppose, for lack of a better term. So, that's a big, basically this is like what is driving the whole business news, to be honest. And I've never seen it affect crypto assets as closely as what I have here as I sit with you in January 2022. I did just want to touch on Omicron as well. And again, I try to keep this purely from the economic realm, and it's not my place to touch on coronavirus related stuff from a health standpoint or anything like that, because I'm not a health expert. But as we've seen, when coronavirus cases really surge and, societal lockdowns really become imposed, that really, restricts economic output and is a real, I guess, negative for the economy, and the global economy as well. So what I wanted to touch on here is China's real increase in Omicron cases in the past couple of weeks or the past couple of months. I wanted to touch on that because last year, when most of the developed world was in lockdown, China was still, I suppose, manufacturing at not the same rate, but a very, I guess, like a rate that was close enough to normal, and that didn't really affect prices, in the likes of Australia, England, US, as severely as what it would have. So to put this another way, if China was locked out and if China's manufacturing sector was just offline, you would have seen inflation just skyrocket even more than what it has already. So why am I bringing this up tonight or today? Right now, China is seeing a lot higher rates than they have over the past, throughout 2021. They did, extremely well at keeping, the coronavirus away. And that really helped them to continue to function as an economy. At the moment, that is not happening. So if China's manufacturing output really takes a hit over the coming weeks and whatnot, that is really not great news for the global supply chain, which, as we've seen last year and as we're seeing on our shelves just at the street, down at the shops, even here in Australia or wherever you are in the world, supply of everything is starting to get a lot scarcer. So that is really starting to concern me more so from what that then has what the impact of that is then on inflation. So, we're all stressing about inflation at the moment, but, where my mind's going to is, this kind of extra now pressure on the supply on what is already an extremely stressed supply chain. If China can't really get its cases under control, then that could really drive up prices in the short term. And again, it would really just accelerate this narrative of central banks having to unwind their monetary stimulus. And that would all just be, in my opinion, have a really negative effect on the high risk assets like tech stocks and crypto. So that's just basically where the state of play is at the moment. And yeah, it all really depends on what's happening with inflation data tomorrow. Will really dictate, I suppose, the short-term price movement in stocks and crypto assets. All right, moving on to some significant crypto news from the past week. Start of January, it's typically a quiet time of the year, so there wasn't as many headlines, but I did just want to go through some of them with you. Billionaire investor Bill Miller now has half of his personal wealth in Bitcoin. So for those of you unaware, Bill Miller was one of the kind of first, I suppose, high-profile fund managers to come out with support for Bitcoin. Paul Tudor Jones being, the real headline grabber. But Bill Miller wasn't too far behind him, if my memory serves correctly. So again, takeaway from this is more just this continuation of mainstream or traditional kind of fund managers and the legacy financial world, some of them warming to Bitcoin and really getting comfortable with having exposure to Bitcoin and or other crypto assets. Speaking of adoption, but this time more from like the grassroots level, saw some quite significant news today with Strike, the Lightning. So the Lightning Network, kind of Bitcoin Lightning Network payments startup or company, they've made some services available in Argentina as of Tuesday. So that is another, massive development for Strike, which is probably one of the fastest growing Bitcoin companies in the world. We saw them last year do significant work with El Salvador, and right now you're seeing them really just, I guess, spread their involvement in Central American and South American countries. Argentina, of course, being a country which has really suffered heavily from hyperinflation, from being, a really high standard of living, only several decades ago to now being a country where all the citizens just like really all they want is US dollars because they have no trust in their native or their national currency, the peso. So I got a quote here. Today we launch a superior financial experience to a country that faces hyperinflation, predatory payment networks, and unusable cross-border transfers. Today we use the world's open monetary network, Bitcoin, to give hope to the people of Argentina. Promising development there, and again, more adoption of the Lightning Network, which is essentially Bitcoin's second layer network, which the appeal of that is just cheaper transaction fees. Okay, PayPal reportedly confirms plans to explore the launch of a stablecoin. So this news came out, I think, last week. Where did it come from? I think it came from a developer, an iPhone app developer, and it would be called PayPal Coin. The development of an in-house stablecoin was first discovered by the iPhone app developer. At this stage, this is really big news, but I guess a lot of the time when they're in this exploration phase, it can take, even if it does get off the ground, these sorts of things can take so long. But I did want to include this in here because we did see, I think about 2.5 years ago, Facebook, or when it was called Facebook, they launched the Libra Association and had their attempt at doing a stable coin. We obviously saw that fall on its face really hard, and they had to water it down significantly to the point where I think they're still doing some sort of version of it, but it was nothing like they originally envisaged. So it would be interesting to see PayPal, if they were to actually go and develop this, how that would be received by regulators in particular, because we're living in a world now where the private sector is starting to not issue their money. Issue money is the wrong way to put it. But I guess the private sector is all of a sudden starting to be responsible for so much more of a percent of people's disposable cash. So whether that's like the Starbucks app in the US is a huge, I suppose, private bank, for lack of a better term, with so much of their customers' funds tied up in the Starbucks wallet. You're seeing Apple Wallet is a similar one, and then Google Wallet, all things like that. So PayPal, just another, I guess, one there that is really, I guess, going to test regulators. It'll almost prompt regulators, I think, to, really come up with a decision on what they're going to do with all these private companies that are, taking it to that next level and potentially going to release a stablecoin. So throughout 2022, stablecoins, in my opinion, will be coming a lot more under they're already significantly under the eye of regulators, but I think we'll start to actually see some more, I suppose, regulations drawn up, whether that's in the US, and coming down on them a bit harder, rather than just all of this, I guess, jawboning and talking in the public that these regulators tend to do. All right, NFTs. All I can say is wow. They have had their biggest week that I can remember. So if you thought 2021 was a massive year for NFTs or non-fungible tokens, I think you should prepare yourself to hear about them a lot more in 2022, because this is my first week back at work, and I feel exhausted keeping up with this, because it is so exciting, but it is I feel like I'm living in another world sometimes. Just the sheer fervor for this type of asset is just like continues to blow my mind. And as we'll get into soon, to see like so many celebrities, and not even celebrities, but just, traditional companies getting involved with NFTs, and giving them new applications that actually come back to benefit artists and whatnot. The appeal of NFTs, I suppose, is what I'm extremely excited about in 2022, and to see, I guess, investor interest in them really hitting all-time highs just at the start of 2022 is, it's a rush for sure out there. There's a lot of people making a lot of money, but it is also, I guess, very, very hard to keep up with. So I think you need to choose your fights. But here, I just want to show, for those of you who are watching on YouTube, I'll just get this screen across a bit. We have seen the daily volume, as you can see here. It's on OpenSea, surpassing 250 million, and it's already at the start of January is on track for its biggest, its most significant month in volume ever. So I think I do have monthly. Yeah, there was a monthly volume there, but yeah, you can believe me, it's on track for, at least at this moment, on track for a record month. Another major development this week has been the emergence of an OpenSea competitor called LooksRare, all one word. They have really taken the NFT headlines for the past 24 hours or so, basically launching and rewarding OpenSea users by airdropping them a token based on your trading activity on OpenSea. And they also, pumping in some heavy incentives to people who use LooksRare, and to those who then stake their tokens. So, we can see the daily volume on LooksRare actually more than doubled OpenSea for the 11th of January. There is definitely, without a doubt, so much of that volume is wash trading. So people trying to game the incentives program to essentially earn free money, really. I think these stakers get paid out in ETH. for trading NFTs, for buying and selling them on LooksRare, and people are making a lot of money just by buying and selling NFTs between themselves, which in traditional markets is illegal. However, in the NFT space, it's kind of anything goes at the moment, and they are getting handsomely rewarded for it. So that aside, it is healthy to see the emergence of another OpenSea competitor. As we saw, I think around New Year's, OpenSea did close another enormous round of funding. I think they only raised a Series B towards the end of about midway through last year. But anyway, at New Year's, they launched a Series C, $300 million they raised. So that will be going into improving the product. As we've seen, as many NFT investors would know, OpenSea can still get overwhelmed by internet traffic. So that's going to be one thing. They'll grow their team, and they're also looking to invest back into supporting the NFT industry as well, whether that's through grants or contests, things like that. So yeah, you're seeing OpenSea really go down another path of being a private company who doesn't have a token, and now you're seeing the likes of LooksRare come out and have a go at launching a more of a community-owned kind of OpenSea. It'll be interesting to see whether that technically, with all the product, all the development and engineering talent that an NFT marketplace requires, it'll be interesting to see if LooksRare can handle that, because OpenSea, already such a profitable and well-funded company, if they're still having issues with keeping their site, functioning, you can't, that would be one of their biggest priorities. And to see them still struggling with that really makes me concerned when I see these, competitors coming out. It makes me wonder how they're going to be able to do much better if OpenSea is still struggling with it. But, that aside, really looking forward to seeing LooksRare have a go at taking on OpenSea. So the LooksRare token is about rank 200 at the moment. So, that market cap has been going up a lot, mainly just from people claiming their tokens, or claiming their airdrop rather. And then also you've got that staking functionality, which kind of takes a lot of the floating supply or the circulating supply. It at least locks a lot of that up into the staking smart contract. So yeah, I think there are some other ones launching soon. I think Universe has their NFT marketplace launching soon. And then you're also seeing a lot of kind of application-specific marketplaces launching. The one that immediately comes to mind is Royal. So that is people call it Blau's music NFT marketplace, but obviously there's a lot of other people working on it. So that actually had a go at launching today, but that actually faltered. And because of the insane demand for people wanting to buy the Genesis kind of NFT drop, the site actually crashed. So again, they would have been aware of how much traffic was going to come on, but even they underestimated it. And again, bringing it back to the start of this NFT segment, I'm just continue to be amazed at how much the sheer influx of demand there is for NFTs at the moment, compared to, the DeFi space or just what we tend to traditionally think of as crypto. So yeah, music NFTs is one of the NFT sectors I'm most bullish on for 2022. I have personally invested in several music NFTs. Kind of the value proposition is a bit different to profile picture NFTs or even, traditional crypto assets. However, I do think just the sheer value proposition of music NFTs, in terms of how much more of a percent of revenue artists can get, in this case musicians and singers and rappers and whatnot. It's just like night and day, really, comparison to what they're getting currently on streaming platforms like Spotify and all that. I just think it's a no-brainer for an NFT sector that's just waiting to take off. People are making similar arguments for photography NFTs as well. Photography isn't a one I'm as well versed in, but music NFTs, at least, is one of the ones I'm kind of, putting my hand out there and saying is going to be in for a big 2022. And I think seeing Royal's attempted launch today was a sign of just how much interest there is for that as well. I do know another one, Sound.xyz. They also attempted to have an NFT, a music NFT drop today, and their site also crashed as well, just because of the sheer demand. So I did just want to kind of also touch on this here to kind of ram home my point of just how much interest there is. Well, this is Australia anyway. Australia Google searches, in the blue here we have crypto, and in red we have NFTs. So the interests, you're seeing NFTs creep closer and closer towards surpassing the Google search interest in crypto. So that really just speaks volumes when you think of how much we traditionally thought of as being crypto, and to see NFTs kind of just fly up and explode onto the scene last year, and looks like it's going to definitely continue in 2022. It's basically become, although it falls under the umbrella of crypto, it's almost become a sector that can exist in isolation from the rest of crypto, given how much interest it's got. So it's definitely a lot of work as a research team here at Collective Shift. We're putting more and more resources proportionally into NFTs, just because for the investment, as investors, there's just just a wealth of opportunities out there, and that's basically where the current interest is in the market as well. Speaking of NFTs, I guess more examples of them that are coming up to just hit the mainstream. Twitter, as we would have seen towards the end of last year, Twitter was working on an NFT integration, and that looks like it's has started to roll out. So I think they're soft launching this, because I checked my Twitter app this morning and I don't have this functionality enabled yet, but I have seen other profiles who have said that it's working. So on Twitter now, you can basically, or soon, depending on when it comes to you, your profile picture will soon be able to be, cryptographically, authenticated as being yours, and you can prove that you own that NFT, or you own your profile picture. Just a really small example, I suppose, of what NFTs can do. But I think, again, just putting that more out there, such a mainstream social media app such as Twitter, to see them really coming out with support for NFTs. I think Instagram is another one that has said that they are really heavily researching use cases for NFTs. So just continue to expect that mainstreaming of NFTs throughout 2022. Another person who has really been, moving the needle in terms of mainstream adoption of NFTs is undoubtedly Gary Vaynerchuk. So, he's many things these days, but I'm sure he needs no introduction for most of you listening. But he launched, not him personally, but his team and his VFriends NFT, they launched this book games NFT collection yesterday, Australian time, and it's kind of an NFT project that's tied to I think his 6th book that he released last year. I do know a couple of people who were just a couple that bought just, dozens and dozens of these boxes, dozens and dozens of his books. And I've seen on Twitter just people who have been buying boxes of these books all throughout last year because he had this NFT idea, which was tied to owning the books. I haven't looked into it too much, but we've just seen this further kind of reflected. I think yesterday was the day they got to find out what their NFTs were or something like that. And if I've just got up on my screen here, just the significant impact it had on volume on Immutable X, which is a layer 2 Ethereum solution. The Immutable team is headquartered in Sydney, for those of you who are unaware, but like to see their volume on their layer 2 solution just explode just on the back of one project was really just phenomenal. And yeah, more so to see all these probably people who this is their first NFT, all these people have also been forced to use a layer 2 solution in Immutable X, which that involves more steps than using just the normal Ethereum blockchain, for example. So talk about moving the needle in terms of mainstream adoption. Gary V and the V Friends collection has definitely accomplished that. One that I did want to also definitely mention was today the Australian Open. So, the tennis tournament, today they launched their NFT. So theirs is called AO Art Ball NFTs. And I'll drop the link to their site in the show notes because you have to see it for yourself. Just like the amount of work that has gone into this NFT. I'm pretty sure they didn't even have that much time to prepare for it. I think it was only 3 to 6 months or so. It's just like really, I guess, at the cutting edge of what's possible with NFTs, and I would encourage you to go on their website and check it out. But you're essentially, it's kind of like an interactive thing, which your NFT, you will own one of these virtual tennis balls, and all of the data from the tournament will kind of be embedded into these NFTs. So all the data from the tournament, what I mean by that is all the players, all of their shots, and all of the results from the matches are going to be tied into your NFT. And I suppose it's going to basically be a probabilistic kind of thing where there will eventually be 11 winners, I'm pretty sure. And those winners will get a bunch of benefits. And of course, I'm just kind of trying to scroll here to utility. And you'll also get future kind of perks, which is, I think, what a lot of people discount when it comes to NFTs. You're ultimately buying, yes, you're buying the utility at the moment, but you also always get handsomely rewarded in some cases. If you're a Bored Ape Yacht Club holder, for example, you often get handsomely rewarded by future utility, where they always try to, I guess, pay their respects and help and give benefits to early supporters. So in this case, the Australian Open has said that they are going to be doing that. So yeah, I went on this morning and I was able to mint one, which was really good. I think it was early access to MetaKey holders. So that was exciting to get that there. And I think the reveal is on Sunday. Just as an anecdote, and as you would have seen me kind of go on about last year, just the gas fees were insane, really. Like they're just so unsustainable. I think I ended up paying, I think it was 0.65 ETH to mint this, and my total cost was 0.115. So I almost spent as much gas than I did. Like the cost of this NFT was, the cost of that was almost the same as how much I spent on gas, which is, just ridiculous. I think it ended up being somewhere around like $300 like altogether. Even though the actual cost of the NFT was somewhere around like 160 or something. So that's why you see Gary Vee and all that trying to push these Immutable X based NFTs, because they are significantly cheaper and I guess ultimately a lot more affordable for everyone. So that is continued to be an insane, a really, really significant problem for Ethereum, as we, it has been for a while now, but particularly, as I just set my screen up here. Yeah, it's been a big problem for Ethereum for about 6 to 12 months now, but the NFT investors really don't care. That's obvious by now, because they have continued to put up with some just insane gas prices because of how lucrative and how much money you can make by flipping NFTs. For example, they almost just will cop that insanely high, or what some people would consider a ridiculously high transaction fee. But in terms of mass adoption of NFTs, there is no way that's going to happen if Ethereum or another alternative blockchain is that expensive. All right, just looking at Bitcoin here, and as I said towards the top of the show, it's just, I can't remember a time where the macro backdrop has been as, closely correlated to the price of Bitcoin. So, when I comment on its price action, you could almost just pull up, the NASDAQ, for example, and at least at this point in history, you'll be able to know what's happening with the price of Bitcoin. So, we did see it crash all the way. It did dip below 40,000 earlier this week, Australian time, and now it has bounced back up to 42,600, and it is below those three significant moving averages: 50-day, 100-day, 200-day. So that is really not a good sign at all for Bitcoin, and I think it has fallen by about 30 or 40% off of those all-time highs we saw in late October. In terms of the RSI, the Relative Strength Index, it did get down towards oversold territory, but has since kind of bounced up a bit and it's now at about 35. If we go to Ethereum, it did go briefly below 3,000, just a couple of days ago, which was for the first time since last September. So that was, very significant. And that too is also now trading below those three, key long-term moving averages. In terms of, what happens next for Bitcoin and Ether, as I said at the top of the show, it's at least, for the short term, what happens. It's going to depend entirely, in my opinion, on what happens with this inflation release overnight tonight, Australian time. If inflation is a lot high, is like above 7%, I would expect tech stocks to sell off and crypto assets to sell off as well. And if inflation is 6 or 5% and just like a lot lower than what people are expecting, then I would expect tech stocks to really go higher, as well as crypto assets. Why is that the case? Because if inflation isn't as bad as what people, if inflation isn't as high as what people expect, then, people can kind of not be so fearful that central banks are going to reel back the monetary stimulus as quickly as what they're leading on. And that basically tussle between inflation rates and monetary policy, that narrative, in my opinion, it's already so strong and it's going to continue to be so strong for the next 6 months in particular. Expect to hear about it constantly, because we do live in these unprecedented times, and all of a sudden all the spotlight is on what a central bank's going to do in response to this these just, weird scenarios right now where you've got, central bank balance sheets at record highs, interest rates at record lows, employment doing pretty well, and then you've got financial assets and property and whatnot all at record highs. So yeah, it's a really weird time, but I look forward to, updating you on all the major developments throughout this year, and keeping you up to date, whether that's NFTs, crypto, or some macro. So thank you for tuning in. If you are listening on the podcast, please, it would be much appreciated if you could leave a review on the podcast. If you're on YouTube, a thumbs up, a comment, and a subscribe would be much appreciated. I'll leave it there. Enjoy the rest of your week, and thank you so much for tuning in.